I'm wondering if there is a risk that the market is underpricing in terms of the Bank of Japan tinkering with their JGB tapering program. Given they're such a whale still, in the JGB market, any kind of tinkering that they do would send yields presumably much, much lower. That obviously could have a depreciating effect on JPY as well. Is that a risk or maybe not at this stage?
I think at this stage, I don't see that necessarily as a risk. I think the BOJ wants to have actually a little bit higher rates. It's lower rates, I think, would not help. It would completely go against the reality that we have too much inflation and some form of rates normalization is desired. And so I think at this point in time, all policies that bring artificially rates down from their end is probably off the table. In fact, we're looking at the 2-year, for example, to go even 20, 25 basis points higher than we are today. So I think at this point in time, their goal is still let's bring real rates making less negative as still as the main goal. And I think if we have that environment, again, coming back to the yen, that's something that is supportive in a world where maybe some other positive real rates in the Western world start to come down.
How much of... Sorry, Len, you want to come in?
Well, I was just going to ask, how do you trade JPY at the moment, right? Because there seems to be this push and pull. You said you reckon that today when we, hear from Kazuo Ueda, the governor, it'll be kind of neutral. But do you think they need to kind of sound a little hawkish because of concern that there could be sell-off if he does sound dovish about the outlook going forward?
Well, if you look a little bit back during periods of no change in monetary policy of the BOJ, we have seen the yen a little bit on the softer side. So there's a little bit of case to be made there. If they just really truly are neutral, it's going to weaken the yen to some degree. On the other side, I'll look at wage negotiation. You mentioned already that looks pretty solid. I think what you just want to signal is policy continuation and a gradual normalization. I think that narrative is probably sufficient to keep the yen bid. I mean, the question on how you trade the yen, the question for me is more where you can have a long yen position where you're not going to get burned by the carry because we still have a quite big rates disadvantage. And what we do from our end, we do it against the Swiss franc, where we think, look, you even have a positive carry versus Switzerland, and you can still benefit in case things go a little bit more rocky in global markets. I think the yen can do definitely more. And if suddenly the BOJ decides to, speed up a little bit the normalization process in monetary policy, then you should also benefit.